Good afternoon, everyone, and welcome to Stock Market Today for Friday, March 14th. It's Alissa Coram here, and stocks had a strong day, but still a not so great week. We will dig into all the specifics as this next 45 minutes or so progresses. And joining me to break down all of the market action this week and to look ahead to next week is my colleague, Mike Webster. Mike, we've got a lot to discuss today.
That should be a fun show, Allie.
Yeah, we've got some counts to go through. 0, 1, 2, 3. We'll break it all down for everyone. It's gonna be a good time.
That was an inside joke. You had to be an IBD Live subscriber to get that joke. It was a little,
Well,
we'll tell you later.
Yeah, whether you're an IBD Live subscriber or you're an avid follower of the IBD methodology, I'm sure you're doing a little counting today when you're looking at the major indexes. So first, let's talk about the action on the day. Strong gains across the board. The Nasdaq leading the way with a gain of 2.6%. The S&P 500 was up 2.1% on the day. Meanwhile, the Dow up 1.7%, and the Russell 2000 up more than 2% on Friday as well. But still wasn't a great week. The major indexes all down for the week. We did close off lows. I know you'll have more to say about that, but we still have this downward trend here, Webby, that we're contending with. Maybe we're starting to see a shift, but we don't have a confirmation signal just yet of a change in the market's direction.
Exactly. So Bill O'Neill, the founder of IBD, came up with something that we use for market bottoms. I mean, the core thing that we use for market bottoms, and he did that before both of us were born. And it's been adjusted over the decades. But the core principle is when you need to change directions in the market. So you're in an intermediate correction, you're in a bear market, or what have you. He came up with a system called the follow-through day to get you in. Now they don't all work. About half of them will fail, but that's about the same for. That's actually better than individual stock breakouts. Only about 44 or 45-ish% of those end up working out, depending on how you measure it. So, but it gives you an expectation that the bottom might be in. So let's just kind of go over that if folks are new. What he did is he did not want to just buy on days like today, just an up day in the middle of a downtrend. Because imagine if you did that, if you track back from 20,000 on down, we had a handful of big up days that if you just bought on those days, you would feel good for the moment, but then come the next day or a couple days later, you'd be regretting that because we're in the steep downtrend. And in steep downtrends, that's when you get the biggest moves up. And in fact, we were up 2.6%, but I would have expected in this position to even been up even more than that. But it was still a big day. But it really, if you look at yesterday's action, how much were we down yesterday?
It was a pretty big down day. Let's see, down 2%.
Yeah, so we made up that in a little bit today, but not if you look at the close from 2 days ago, that's really all the progress that we've made. So it just feels a little bit more dramatic today because, we were
Mm-hmm.
so near our lows yesterday. And anyways, getting back to the follow through day. Sorry, I go on tangents if you haven't noticed, Allie. So we hit bottom 4 days ago, but that wasn't where we started counting because that closed in the lower half of the range. If it had closed in the upper half of the range on that day, we would have called it day one or our first day of counting. But instead, you look for your first rally day, which was the next day. So then you wait for your fourth day or after to
Mm-hmm.
have a confirmation that
As
the
long as the ultimate low holds.
exactly. That's such a good point that it just barely held. In undercutting the rally day and closing below
Mhm.
it is very rare, and in a little bit we'll circle to like one of the few times where that ended up happening in the market, and we'll see that
Yeah.
in a few minutes. But anyways, what you're doing is you're waiting for next week. So Monday would be day 4, and after it can happen on the 20th day, the 25th day. There's, typically they happen within 4 to 10 days of your rally day. But there's no rule on that, that you have another big up day. And so right now we're just looking for a 1% move with volume higher than the prior day. That's the orthodox way of looking at a follow through day. Is the volume doesn't have to be above average; it just has to be higher than the prior day, and that was a big deal for Bill. So that would be our signal that we would have a follow through day, which means then you can start buying. Like right now, if you're an orthodox trader, you're sitting in cash or just some positions that you're way up on from way back
Right.
when that you're trying to hold for a bigger move, but you're not buying anything. And then you're waiting for that follow through day. When that happens, you start nibbling, and Bill would always buy one or two things on that day and then see if they were really probes. Sometimes they would be big positions if there was something beautiful in position, but most of the time they were just probes, see if they work, and if they work then he would add to them, and you get a lot of other confirmation signals after the follow through day, like getting above the 21 day or actually getting additional follow through days
Mhm.
that happen after the first one, as long as the close is above um, the original follow through day, is the simplest way to look at it. So it's just not like we get a, let's say we get a big or just up a 1% on Monday, which really wouldn't even be that big, but that's all you really need. And then you would just buy a little bit, see if that holds, and then add to
Mhm.
it if you get further confirmation of both the index holding above the low of the follow through day, which is a very key thing. So let's say today was the follow through day, you'd want to hold above today's low. Now, with a gap up, it's tricky because your real low is yesterday's close. So it could go all the way down to there for your true close. And that's a little inside baseball, but it's just to keep this as simple as possible. If you're new to the follow through day, you wait to have a rally day. You want that low to hold. And then on the fourth day or after, if you get a big move up, then that's your signal
Start
that
nibbling.
you can start buying. Now, in this position, let's look at the SPY for a second, because it tells a completely different picture because we undercut our lows there. So that means today is just day one. So we could only have a follow through day on the Nasdaq, because even the Qs undercut the lows, and we don't use the Qs for a follow through day, but we can use
Mhm.
the S&P, we can use the Nasdaq, and sometimes we use the New York Composite. Let's go ahead and pull up the New York Composite. And that one undercut yesterday too. So today is day one for both the S&P as well as the New York Composite, and pretty much everything
Mhm.
except for the Nasdaq.
Right. Okay. And you said we'll look at some historical examples later,
Well,
correct?
we can
We'll
do it now.
circle back.
Let's
You wanna do it now?
Yeah, why
Alright.
not? We can do
Why not?
like Chris said, we can do whatever we want. So let's go out to December of 2018. Let me get the exact
Do
date.
you wanna do January to see it all,
Yeah, let's
or
do let's do January.
okay, we'll do the
And do you
following
have that date that
January.
I sent you? If not, I can look it up.
Was it was around here. It may have been 1/4 or something like that. It was
Yeah,
kind of around there. Oh,
yeah.
you sent me a date?
I sent you a date, but I'm looking it up. But oh, November 23rd of 18. Let's go there first.
Okay. November 23rd of 18. You got it. November 23rd of 2018.
Okay, so I asked Justin earlier today, because he's the keeper of all the data and he's the best researcher, um, historian out there, in my opinion. And I said, "Hey, what were some of the other examples where we had a follow through day that where you actually closed underneath the low of your day one rally, but didn't undercut your absolute low?" So, and this is the case where
Mhm.
that
There's
was
day 1.
your day one, your prior day was your low, and then you close below it. So very similar to our current market. Now let's just go out. You can go out a couple weeks,
Okay.
okay, and you could see how that one ended up failing. You did get a follow through. A couple days later, got that follow
Right
through.
there.
Yeah, then it ran up to the declining 50 day, near the
Mhm.
200 day, and then rolled over. So I think
Mhm.
this is actually 2018 is a good precedent for our current market. And you can go out to the
Yeah.
January 4th day that you originally went to. And so this was a very classic, uh, or
2019. Should have changed the
2019.
year.
Yeah.
There
Sorry,
we go. No, it
misspoke.
wasn't you. It wasn't you. It
Oh,
was
okay,
me.
that's a
It
first.
was me.
The first time today I haven't made a mistake. So
Yeah.
we have 3 waves down in here. You can see it comes
Mhm.
down to the 69.22, runs up, gets a follow through, fails. 68.30 runs up, follow through, and fails. Then you get another real sharp decline, kind of a capitulation type of selling, and then eventually you get your follow through day. In this case, Jess and I were looking at it earlier. That day wasn't technically a follow through day because the volume was lower than the prior day, but you did get one on January 4th on the S&P. But
Mm,
that would have
mhm,
been one in
mhm.
spirit,
Yeah,
either the way I look at things.
right.
So this is kind of a normal type of bottom. 3 waves down. We saw that in 23. We've talked about that a ton. We saw that back in 2003. It's very normal and something that Bill
Mhm,
originally came up with, and then we've seen and noticed a lot of examples like this. It kind of just
mhm.
has to clean people out because you know you get a market bottom, what appears to be a market bottom. Let's do a change date up to the day where the 75
Yeah,
72 that day, because that just
okay.
kind of jumps out at you. And you always, when you go back on these, you want to be completely intellectually honest with yourself and just say, how would you feel on this day? What would you do? Well, you would buy,
Yeah,
right?
I
Because,
would be nibbling.
yeah, how could you
Mhm.
not? I mean, you were
Back
just
above
at
the
under
200 day.
7,000. Now
Closed
you're
at the high.
yeah, so without knowing that it ends up failing, you look at that and say, okay, where are stocks, to buy, and then you buy a little bit of it, and then you see what ends up happening. And then the key is like, yeah, let's just go there. That's the key. You
Yep,
closed underneath your low of your follow through day. You need to back away
yep.
at that point until you get back above
Mhm,
or get another follow through day. So you would be in for a couple days, right? You buy on the fall, you buy on that big day, and of course, you're always cognizant of that 200 day because that's so tricky. So this is how the follow through day system works. Now let's go back to our current
mhm.
market.
Can I have
Since
one more thing to add? 'Cause,
yeah,
it's I have to go on it if you can go on tangents, I have to be able to go on tangents too. Because
yes,
I
you
was
can.
actually looking at, this earlier as well. In 2018 and 2022, 2 similarities with the current market action is off of the highs, you had 4 weeks down in a row coinciding with a break of that 200-day line. So I think that's also interesting as well. Could this time be different? We'll have to see and, dip our toe back in the water when we do get a follow through day. But I think that's a great reminder there. Keep an eye on the low of the follow through day.
Yeah, and I love it when you do your original research. That's wonderful. You can always go on tangents with me. I mean, I'll be here all
Just
day.
a little factoid.
Yeah.
Factoid. I thought that was an interesting similarity there. Okay,
Yeah,
back to the current market.
yeah, back to the current one. So with this, again, just reminder, like if you look at the weekly chart, that's a nice bar, right? It looks like an upside reversal, smells like an upside reversal, where you come down, close at the highs, and look at the 15,708 week.
Hmm.
It's in that same thing. Like that was more convincing, a wider
Yeah.
spread and closing right back where you were. Whereas this week we were still down 2.5% or
Right.
2.4%. And what's really different here is in that case you were defended, or the
Yep.
the bulls defended the 200 day or the 40
Hmm.
week here, and this one we didn't because we fell through it last week. And the reality is this is what you would expect. We were overdone, coming down, unless we were going to crash, and crashes are very rare in the market. There's just a handful of them, but most of the time, even on the way down in big bear markets, this is how they roll. They roll down and then they bounce up a little bit and then they roll lower and then eventually gets washed out. This to me still feels very early for this to be done based on the stocks that I've been searching for. Like,
Yeah.
I was talking to you about before the show, trying to find names in position
Mhm.
to talk about, and there's hardly anything out there. And the ones that are holding up might be the ones that end up failing if this works. So I'm still very very cautious. I'm almost totally in cash still, But you always keep an open mind because
Yeah.
the news can change on a dime, the market can change on the dime, and probably the most next week on Wednesday we have the Fed. So anything prior to the Fed is it's kind of like wasted time
Tough.
because
It's tough.
that can really change everything. We saw that on December 18th. There was really a tone change when we had the that press
Powell
conference.
pumping the brakes.
Yeah, and so with today, we got some more data from the University of Michigan. We don't have to get into it, but it's basically inflation expectations. Uh, survey is showing some really bad numbers, which would be
Mhm.
bad for the market. Let's go to the intraday chart for a second.
Sure. Yeah.
Um,
Weakening consumer confidence as well.
yeah.
Data.
In the weakening consumer confidence doesn't bother me as much as inflation expectations because that's something that
Mhm.
Powell really looks at,
Mhm.
for the whole wage price spiral. And we don't need to get into that. But when this came out, if you could just point into it a half an hour into the trading day, that we fell like a rock, and which we should have on that news when it came out, but then we firmed up and were able to take out the highs. So that was very positive. I was not expecting that, and that was stronger than it should have because that news was material and negative. And when you get negative news and move up on it, that's a big positive
Mhm.
sign. And it's not foolproof, but it's one little, you're that's why I'm trying to keep an open mind, keeping green shoots and everything. We got, St. Patrick's Day around the corner, so we're
Yeah.
always thinking green if we can. And
And then that
that
was
would
the exact support level as well.
yep, isn't that funny how that
Yeah.
works?
Yeah.
Um, so we'll see. I mean, the Bulls wanted to, defend things, and to me, today felt much more like a short covering rally than it
Mhm.
was really an accumulation day. And
Right.
there is
We're
a difference.
so oversold,
Yeah,
we're very oversold here. So short-term bounce, false rally, that kind of thing. We will find out. It's,
yeah, and
in a matter of time.
that would be very normal for us to
Mhm.
bounce all the way up to the 200 day. Like in that's if you said, okay, what's normal and natural would be a bounce up to the 200 day, and typically they move up a little bit higher just to squeeze the shorts a
Mhm.
little bit and then roll. Like that's my base case, but I
Mhm.
will be open to changing based on if the
Yep.
facts change.
But yeah, 2018, that's a great example to look at. I think 2022 as well for folks for that homework. All right. Moving on. We want to take a quick look at the S&P. Anything else to say here before we move on?
Well, I like the S&P more because it means it doesn't force us to have to take action on Monday. But, I'll tell you, I've never not bought something on a follow through day. And if we get a follow through day on Monday on the Nasdaq, I'm going to buy something, but you
Mhm.
don't have to buy a bunch. You just have to buy something because you have to switch your attitude from defense to offense. And it seems like the ones that really work are the ones that it's the hardest to shift
Mm,
because you're so negative, and that just comes with seeing the market come down like this. Let's look at the FFTY for a second because I didn't pull that one up today,
yeah.
and this is kind of what our stocks have been doing for the last month.
Mhm.
It
Yeah.
broke out of that base, failed, a really strong move today. I mean, 3.85. So you could say that we had well, it looks like a fourth day if I'm counting right today, that if we were using this for a follow through day without volume, like it's at least has that, so that's a positive. But we would not use this for a follow through day nor other
Yeah.
sector ETFs or anything like that. But it's good, a good sign. But there are a lot of damage, and so many of the stocks I was looking at look like they're in that position.
Mhm. Okay, are we ready to
Yeah, we're
move on
ready to
to
roll.
okay, ETFs. So, FFTY is close to the top of the list in terms of what bounced the most today. So it did seem like uh, money rotating, potentially, dip buyers coming back into growth, your tech areas as well, your risk on stuff. Bitcoin, IBIT here leading the way today, but it's been beaten down pretty bad, Webby.
That's in a very weak position. It's good on a weekly that it got support there at the 40-week
Mhm.
line, and near the top of that base, but it's really in a choppy area,
Mhm.
and I just, I know if you're actively trading Bitcoin, I would just wait until you're back above the 50-day,
Yeah.
and I know a lot of people just buy and hold these things, and that's a whole different game. But if you're actively trading it, it's just not in position.
I like using the same setups that you would for stocks with
Yep,
something like
me
this.
too. And I'll let you
Okay.
run through these. I'll just
Okay.
speak up if there's something to say.
I'll try to go quick. ARKK, speculative growth, representative of that. It's been beaten down, led the way today, but still in a damaged position as well here underneath that 200-day tech and software. Again, this was another leading area here, up three. IGV up 3.8% on the day, also in a weak position. But let's see what next week brings. Chips, this was also that area. In 2024 that was impressive, especially in the first half of 2024, then went pretty dormant, then became a big laggard, now trying to bounce here. I think Nvidia perhaps showing some subtle signs of folks getting back in. I don't think it looks great, but this was another area where there was buying today. But I think it'll still take a little bit for this to look interesting again as a sector. The Magnificent Seven Fang Plus type stocks, also a bit of buying here as the week progressed. Still in a pretty weak position. I mean, if you just look at some of the Magnificent Seven names, a lot of them have just had so much damage. I know, we were recently in recent weeks looking at Netflix and Meta as the two that were holding up the best. And even they too, below their 50-day lines, just look like they might need a little bit more time. Maybe one could imagine Netflix next week. If it has a strong week next week, gets back above that 50-day line, maybe that could look interesting. But a lot of the Mag 7 look pretty weak here.
Can you stop there for a second
Sure.
and go to the meta on the weekly.
Hmm.
Um, and so if you can picture in your mind, a bigger base, this looks normal and natural, like it's a bigger base and might go down a
Hmm.
little bit more down to the 40 week, but this is normal and natural action on a weekly, but meaning you would still need a lot of
Time.
time
Hmm.
before it's a normal setup. Now let's go back to Netflix on a daily, and I love Netflix, and I've talked about it on here before, but that's a broken chart at this moment. It is a minor break, or let's call it a sprain, but the way it's sliced through the 50-day, and now we're just bouncing up. If you did like a 50% retracement from the day before that
Hmm.
to where we came down to, we're not bouncing up enough to be convincing. So, and this is one of the better looking ones,
Right.
which tells you, we're in a bit of trouble.
Yeah. I mean, one could potentially imagine, you
Yeah,
know,
hopefully.
it carving out the right side if market conditions improve, but
Exactly,
that's a
but,
myth.
and this one would take more to look right than Meta just because of that break,
Mm,
and would really need to prove itself above 1,000 before we'd be interested in it.
yeah. Okay. XLK, similar theme here as what we've been talking about. China continues to be an area of strength. KWeb up 3% on Friday. So China continues to be an area that looks great outside of the US. It is interesting. This is, of course, the China Internet ETF, but even we've looked at IMCHI, a broadly diversified China ETF here with surging relative strength in recent weeks. This is a part of the trade war, but investors are not concerned here with the China trade war. It seems like the other tariff talks that are going on are a little bit more concerning for investors, but China seems to be immune thus far.
For right now, and that's why, I do have a token position in KWeb. I do think today the MCHI looks better, but this one has looked better in the past. So probably, if this continues, I'll probably add the MCHI as well. And you've got a relatively tight stop on this one, right there, 35 bucks coincides with the 21 day, and then you're wrong. Now the the risky part of trading these is you can get some serious gap downs on news, so you always have to keep China
Mhm.
small.
Yes. Yes, yes, yes. Okay, XLE, energy sector, it's been very choppy. Perhaps we are finally seeing a bit of a turn in that relative strength. If you look on the weekly and those moving averages, seeing a little bit of progress and some daylight, a break of a trend line there. But what are your thoughts on the energy sector, Webby?
It's still too hard
Yeah,
right now. I mean, I'm seeing some stocks pop through, uh, but it's such a mixed bag and so tricky, and there's so many moving parts because you've got the dollar, you've got oil, you've got news, you've got everything, and that's not a really good looking chart. But
yeah.
yeah, on the daily, it looked much better than the weekly, but so much chop. I would just wait for this to get above the 200 day, because it does look kind of like a little double bottom that with your pivot at the 93.02 level. So
Mhm.
it's moving in the right direction. And you always want to keep an open mind to groups that trade counter to what
Yep.
the normal market does. So this one has been disconnected from the market. So I kind of would treat it like gold or foreign markets or something, because it's not a high correlation with like the S&P, or certainly not with the Nasdaq.
Yeah.
So from that standpoint, it's interesting, but I just haven't found any perfect
Mhm.
setups.
Okay, we have a lot more, so I'm going to try to really breeze through
Sure.
these. Utes. This is the utility ETF that does have that AI utility bent to it. This was another area where money was flowing today. This is another area I think that needs more time, but we are seeing a little bit of improvement, step in the right direction. Insurance remains an interesting area. I actually like the pullback that it had this week and then some power on Friday. So that's what was interesting about today, Webby, is you didn't just have the money rotating back into that risk on area of the market. A lot of insurance stocks this week underneath the surface we saw with RS line blue dots.
Yeah, it was surprising when I was screening today. So many insurance stocks that looked good, as well as normal utilities, not the AI utilities. And so that was another reason to
Yeah.
stay negative, because that's where money goes to hide, not
Right.
where growth goes.
So yeah, I'll just go ahead and pull up XLU since you mentioned that. Financials also bouncing today, but a lot of recent damage there. These charts are also going to need a lot more time in general there. Let's go to consumer discretionary. You have Tesla and Amazon in here, and both of those stocks, unfortunately, not looking good right now. Then you have real estate. Had some relative strength in recent weeks, then a pullback this week. So not my favorite area right now. Perhaps there are, pockets underneath the surface there that are looking better. RSP, do you want to give us a quick update on the equal weight and breadth, Webby?
Yeah, so this is, as any normal viewers know, this is how I like to look at breath, and it's not good setup. Yeah, one big up day, up 1.9%, which is great because your average stock is up 1.9%, but it didn't even recover. Doesn't look like visually even half of this week's action. So yeah, it's nice and it bounced, but I mean things don't go straight down. So
Hmm.
this just feels like a wiggle and a wobble at this
Yep.
point.
Okay, well, outside of the US, you've been really great about pointing out how money is flowing not only to China, but also I think it was Europe, Asia, Far East, including
Yeah.
Japan, that type of area, money flowing there. Perhaps a little bit tricky action lately, but definitely strength today. Look at that relative strength line. Very strong.
Yeah, that remains an area. They're not gonna make it easy because this area has been dead forever. Not like months, but years, lagging, the US. You see that RS line going straight down. So it's been underperforming us for a while. So, but if this gets going, you're gonna get
Mhm.
money chasing it, because
Yeah.
it's a relative game. And so if it's not working here in the US, money is much more hedge fund money than
Mm.
mutual fund money, because they kind of have constraints on them. But this is where I'm the most interested, is international.
Yeah. Communication services XLC, you've got Google and Meta here. We reviewed Meta, and Google's chart looks even worse. So the downtrend continues here. Interestingly, the relative strength has been holding up, but this just goes to show you can be a relative winner and still an absolute loser. Ed Carson likes to say that. Let's go to XLI, the industrials bouncing Friday, but still in a weak position. That's sort of a recurring theme here. Webby, the S&P 500, high dividend, low volatility, which is something we've been keeping tabs on, hasn't ultimately made a ton of progress, but that relative strength line has been shooting higher. But high dividend, low volatility, that is a place of safety, right?
Yeah, and you want that to roll. You want that to, or at least go flat or lag the market. You don't want to see an RS line like that. That's not a healthy market. This is a place where folks hide.
So same with what you were saying, the utilities, the
Yep.
staples, these defensive areas. We don't want those to be the strong areas of the market. Here's materials, weakness there. Healthcare has been strong but weakened this week. Consumer staples, which I mentioned, this is coming off this week.
Yeah, that was the best thing I saw. But it was also a reminder because there's so many of those that were breaking out, like MCD. Wait,
Right.
no, that's not in that one. But there were ECL.
Defense
Yeah.
defensive name.
Um,
What was another one?
ECL, which I think
Okay.
is
Yeah.
actually in that group. Sorry, but
All
yeah,
right.
they trade the same McDonald's and this. Break out of a decent base and then fails. Like you know, that's there's nowhere to hide, right? Because you move over into there and you buy the strength, and then that
Right.
rolls, and you buy something else in strength, and it rolls. So it's another reason to just
Yeah.
stay very light.
Yeah, that's exactly why I think a lot of us have cautioned about rotating into the defensive because this is what can happen. And
Yep.
then gold, very strong, and another great up week this week. On the day flat, but had a nice day of outperformance on Thursday. So gold continues to shine here in this market.
Yeah, gold, silver. I'm playing this space right now through GDX at a small position, and that's what we've got on Swing Trader, and it looks nice and all, but it's the same. Just being intellectually honest, it's the same thing with the other things that we were talking about. Is you
Defensive.
don't want gold to do well because people are going into gold for safety, so you
Mhm.
you want this to fall apart. So our
Mhm.
normal stocks work, but this is one of the best looking setups. So
Right.
you've got to take a shot at it, and where your stop is, and at maximum is that line that
Mhm.
you drew,
Yeah.
yesterday's low.
And a rough proxy for the example of what you're talking about is the market started ripping in early November and through mid December. And that's exactly when gold was majorly out of favor.
Yeah, it's as inversely correlated as you can get, but there's still more correlation than you would like.
Yeah. Yeah. Well said. Okay. That is it. You want to take over now?
Did any stocks you wanted to do,
Oh my
or
gosh. That's how long the ETFs took. Like, all
yeah,
right,
we'll cut
let's
out a
breeze
few of
through.
those ETFs for
Okay.
next week. Sorry about that.
No, it's okay. Let's breeze through our stocks. Like you said, the cupboard's a little bit bare here. We did want to give something that was growthy. So Uber, growth stock here, setting up with a cup with handle. Relative strength, not all too impressive here, but this is a base that is forming. So we're just trying to find some names for the watch list if the market continues to strengthen.
Yeah, and if this one ends up failing, it would have all the hallmarks of
Yeah.
why, because it's a wide and loose base. It's a deep base. It traced out a nice cup with handle. That's a positive. But the reality is, when you've got a deep base in a bull market, which that was formed during a bull market, it's telling you that there's not a level of equilibrium there between the bulls and the bears. People don't know what to pay for it, so it's a lot of price discovery. So they really need something positive to come out, and but at least it's holding up. I mean, this is holding up better than so many
Mhm.
stocks, but you can see how it's been trading for the last year versus how it was trading prior to that
Yeah,
is night and day. It was tight before, tight weeks, not big spreads, nice trend up. Then you formed that big ugly base, and everything has been
very
different
messy.
since. But I love Uber because they do it's a great service both for their employees or consultants or whatever they're called, the drivers as well as for the users, and it helps out so many, drunk driving accidents are reduced or eliminated because of them. So I can always get
Mhm.
behind Uber, but it's just one of the best things we could find, but I'm not crazy about it, frankly.
Yeah, base is definitely not an A plus setup. What I do like is the improvement in the earnings. I like the earnings line sloping up. So maybe not as great of a base, but the earnings growth has been pretty impressive. And you do have an acceleration in that top line growth too. So I like
Yeah.
seeing that.
Let's go to the daily just to show people where the action would be. So it's a very steep angle. So lots of times you don't want to take that, um, buy it right when it goes through there. You kind of wait for a prior resistance, which is that shelf up, yeah, right there. So that's a long way up, but that's your safer way to go because then it proves itself. So if this was a different angle, like more like this rather than like this, then you would just
Mhm.
take it as it breaks that. But that's a yeah, like something like that would be ideal. But it's worth watching. I love that it got support at the 200 and the 50.
Yeah. Okay, moving on. With all of the strength in China, we thought it'd be a good idea to circle back to Alibaba because it's had a huge move and it's still digesting that huge move and tightening up here, I think.
Yeah, I mean that's exactly what you want to see. I mean that's tight for a Chinese, internet name, and you had
Mhm,
lots of power up there from the bottom of that base, and then you went up here and paused. Exactly what it's doing everything it should do. Um,
mhm.
I would prefer to trade it through KWeb, just because,
You don't have
and
that
I have
single
been
stock
trading this
risk.
one off and on, but the individual stock risk in China is not something
Mhm.
I'm a big fan of.
Yeah. There's
So
been some couple big down days in here. I mean, you had
yeah,
off the highs, you had a 10.2% down day, you had almost a 6% down day. So there have been some big down days as it's digested.
yeah. So, but this is for folks who want to trade heat,
This is the
this is
best
the
looking
best
one.
looking heat that I could find.
Yeah, absolutely. Okay, opposite of heat, we've
Yeah.
got GE Aerospace. It's sitting at the top of a prior base as it has pulled back, also right at the 50-day line.
It's a bad market when we're talking about GE, but it's getting support where it should get support, top of the base, like you said, and the 50 days. So when you get multiple places there where something can get support, that's a positive. They're not with all the Mag 7 stocks, you can see the institutions are just letting them go one at a time. Meta was holding up really well. Netflix, like we talked about, then they finally hit those. But before that, all the other ones were running into trouble. And so
Mhm.
this one, I mean, it's obviously not a Mag 7, but it's still, a large cap. And it's really changed. Let's go to the monthly because this one really changed its colors. It, it had been a dog for back in the day. It was a great
Yeah.
stock in the 90s, but that changed completely, and they were in trouble for decades. And they finally fixed things, or
Mhm.
it looks like they've fixed things. That RS line has been trending above its moving averages. But yeah, if I was going to be forced to buy one of the ones that we just talked about, this would be the one that I would go with. But I would just keep it small,
Yeah,
because, but at least you have an exit. Let's go to the daily chart real quick.
sure.
Um, so with your exit would be, at the most yesterday's low if you were to trade this. If you were to buy it above, um, the 21 day or maybe above 200, then you would
Mhm.
use today's low as your stop at the most, the 50 or yesterday's low. So you're not taking on a ton of risk unless you get a gap down. But still, I think just sitting on your hands is better.
Mhm. And the ATR here, manageable, with 21-day ATR less than 3%. I don't know if Baba's already in my list here. It doesn't look like it. Just to
I think
compare.
it's like 5.5, but we'll see. What is it?
I don't know why my oh, it's because it's sorting by the ATR. I'll sort it by the symbol because it'll be easier for me to find it. Yeah, 5.6%.
Okay. All right. Do you want me to
Okay.
move on to
Yep.
our charts?
Let's move
Cool.
on. Over to
All
you.
right. Okie doke. The stress. The stress. Can he do it? Can he do it? He
Yes,
did
you
it.
can.
All right. So let's take a step back, Bob Weir style, and look at the weekly candles. So this is actually a really good looking candle compared to what we've been seeing. And let's just blow this up because of this really long bottom wick that we have there. So it traded all the way down there and came up, leaving you with an expectation that it's a short-term bottom that wants to move higher. So even though we were very negative about the other charts that we were looking at, you take each chart and you just have it like a little mosaic. You paint a little bit of the picture with each one. And this was bad having those three bad candles in a row. And even though we close lower than we open, that's why it's still pink here. That bottom bar or the bottom wick portion is a good thing. We would have preferred it to at least get up into the body up here. So this is like good, but not great. Let's see. Let's go over the composite. And this one looks a little bit better because that, at least appearance, that the body is even smaller and you've got a longer bottom wick, but you are still dealing with a pretty big gap down from last week.
Mhm.
So it just feels like at least a short-term bottom has been put in, but nothing to write home about. Do you have anything to say about this one?
No, I agree. It's definitely an improvement, but it's important to take things day by day and week by week. So we'll have to see what we get.
Okay, I agree with you. Okay, let's go to some fun here. This is the
Mhm.
regression lines, and remember that we were drawing this regression line here starting on January 13th, and we were going out until February 21st, which wasn't enough time. We liked having 50 days worth of time for a regression, but just as a visual to see how it was trading like this, and then it fell out of that, and then it came straight down. And on the composite, I added one on the downside just to show you kind of why we're bouncing. If we
Yeah,
do this
so steep.
yeah, if we do this regression from the top here on February 18th to where we're at now, and I think Justin said this was like 19 days or something like that, but still not enough to draw one. But clearly, this is not sustainable because you can't go down. If we kept going along this path, we'd be at like zero in a month or two. So that tells you you're going to have a bounce. Now, doesn't mean we have to have the bounce next week, but you know that this is, and I would do the same thing if we were ripping up, just telling me that, okay, this trend that we're having short term is not sustainable for even an intermediate term basis. So this is another reason to kind of expect it to at least move up around this area. So, but as you said, we'll take it one day at a time. Here's our 50% retracement, starting off with the NASDAQ first. You can tell with using the high there from the 18th of February to this week's low, and we're nowhere near the 18,674 that you
Yeah.
need to get to your midpoint.
Well, quick
Same,
question. I mean, you have
yeah.
such high standards for stocks in the major indexes. Why don't you do a 51.5% retracement?
You made my day and my week with that question. I love that. I love that. That's great. You put a smile on my face. So here we've got the 581.46 that we need to get to for your midpoint. And that's just to get to your midpoint of this. You really need to get up in this area above your 50-day to before you even get excited about it. Now, here are the levels. I have not changed any of the levels that we had up here. Those are still in there in the various colors. But
Not in contention anytime soon.
no, not at all. But I just wanted to leave them there just as a reference to see why
Mhm.
we do this. I mean, there's a
Right.
reason why we have these levels on here. When you
When
move
they break.
below them, you've got to
Yeah,
take action. You know,
right.
you don't do this work and then just go, okay, well, it's breaking through this one. Maybe it'll hold the next one. Like you take action. That's why
Yep.
we've turned defensive.
Well
And
said.
you can see that the one that I drew last week, which was last week's low, uh, the 565.63, we blew through that. We couldn't even, with today's bounce, couldn't even get up to there. And then I put another white line on here for this week's low. And we'll just leave
Mhm.
those on there and hopefully move above them. And I did the same thing on the Nasdaq. At least here, we almost got back up to the low
Yeah.
that we had in there last time. But look at this line in the sand that I drew really thick here. The 18,831.
Mhm.
We're like a mile and a half away
Yeah,
from
that was
that.
a major undercut.
Yeah, and then we'll wrap up these charts with the very basic thing that we like to do is just get rid of the noise. Just look at the 21 day, which is that blue line, and just observe. Like, where are you? How does this look to you?
Not good. We're way below a declining 21-day line. We are gonna need some time. It's gonna take some time to get back up above it and get it headed in the right direction. But that's what we're waiting for. That's our sweet spot. Thanks to your research, that's when we know that's the time to press the gas when you are above a rising 21 day.
Yep. And I always say gas, but I guess with EVs, I'm going to have to say accelerator.
Yeah, there you
So
go.
I got to get used to that. It's going to take me a while. So, and then here's the composite, the same basic thing. Let me
Mhm.
switch over to the Webby RSI charts because there's some interesting stuff there. Just 1 second. I'm getting so much better at this
Good
because
job.
of your help. Let's see. All right. So here's SPY with the Webby RSI. And what's notable is when, and of course, this measures your low versus your 21 day when we're above it. It measures your high versus the 21 day when you're below it. And we just express this in ATRs instead of percent just to make it relative so you can compare
Mhm.
all instruments against each other. And with this one, just blowing this up, when you get up to three ATRs, either above or below, so this works in both directions,
Mhm.
it's typically time for it to slow down and do a mean reversion or a bounce or a pullback, a
Yeah,
bounce up when you're underneath it or a pullback when you're above it. That's what is
makes
normal
sense.
and natural. And so here we on the 11th on Tuesday, we had our maximum reading and it was up about like 2.9. So that was getting pretty close, knowing it's kind of telling us, hey, we're probably ready for a bounce. And then we went lower, which was a bit odd. Um, so that's one thing to look at. And it's a little bit more obvious on the NASDAQ. It got exactly up to three right there, which was telling you it's normal and natural to bounce, which gives you more information that you don't want to take this too seriously because it's not a trend change yet, because it's just we're starting to bounce. We've got 1 day of a bounce really in this counter trend type of move. So, it would be normal for this to get smaller, and then we really have to see, and that's why we pay so much attention to that green line there. Let's look at our Bob Marley off high, and we'll start with SPY. This is in the yellow territory down here at almost 7 ATRs off our high. Our low was this week. That is really dangerous. We want to see it get back up into the 4 area, which is your green space. Let's take a look at the RSP, which is the equal weight of that. That got all the way down into the red area at its low. So we really want to see this move up in a big way. And then we'll wrap that up by looking at the NASDAQ. Again, it's blown through all its levels of support, which were, around 3 to 4 ATRs off of its high. And we just fell through that like it wasn't even there. Now we're trying to bounce. So, you know, I
Yeah.
want to be positive. I really do. But you have to be realistic. Like, yes, we could get a follow through day on Monday. Yes, it could work. Yes, we could have hit the lows. But the reality is, unless there's some big news that
Mm.
changes, um, or action in the market, it's just still too early. And if we get a follow through day next week, whether it's Monday or Wednesday after the Fed or
Yeah.
Thursday, we'll act, but we're going to kind of temper our enthusiasm a bit.
Mhm. Well said. And I think the other important thing for next week is maybe there are stocks right now that aren't showing RS line blue dots, but all it takes is a couple of days, right? And things can look different. So continuing to update the watch lists and run screens, I think that's going to be very important as next week unfolds if this rally attempt continues.
Yeah, and that's a really important point that you made because when you look at market bottoms or a few days off the market bottom and you look at a bunch of stocks, lots of them look bad. And it is what you said. You just get a few good bars up, and it's like, wow, that chart looks good now. And you have to be open to that.
Hmm.
And you have to be so flexible. And that was a great thing about Bill O'Neill was he would be super negative, on Sunday. And then by Wednesday, if the facts changed, he would be as bullish as he was negative. So we just roll with what the market gives us. But right now, it's just giving us, the waiting is the hardest part, Allie.
There you go. Also, remind me on Monday. I think a good thing for us to talk about on IBD Live, reaching into the file cabinets in my brain and remembering this is before you even came back to IBD, but we had you on IBD Live and you unveiled your relative strength line moving average strategies.
Mhm.
You talked to us about RS line moving average crossovers as potential buy signals out of
Yeah.
periods of market weakness. So that could be interesting to talk about next week.
Yeah, let's do that. That'll be a
We'll have
fun
to see.
that'll
If not
be
Monday, maybe Wednesday, or we'll,
yeah,
we'll
that
see. We'll
that
see how the week goes.
that'll be a fun and just everyone just remember Wednesday is the Fed day. Even though they're not expected to do anything, I think CME Fed funds futures were at like 99% that they're going to
Mhm.
do nothing. And
It's
they will do
Powell. It's
nothing.
what he says and what the market's reaction is to what he says. That's
E-
what we'll be watching.
exactly.
All right. Well, thanks, Webby. And
Sure.
thanks, everyone, for tuning in. That
Oh,
is
wait,
it
I
from
want to say
us,
one
except,
I gotta say one thing because I
sure.
told my son that I was going to mention this.
Oh, yeah, that's right.
Today is Pi Day, and
314.
314. My kids are 23 now, but my twins used to have competitions on Pi Day to see how far out they could go, and he got out to I'm not sure what she got out to over 100 digits out.
It's
He got to
amazing.
160 digits. So pi is the 3.14 and a
3.14.
bunch of the stuff.
So
I could only get
528.
to 3.14 because I'm not that bright.
I think
But
it's 3.14528. I think that's as far as I got.
wow, I'm impressed. Look at you.
That's not impressive compared to 160.
Yeah, and he did that when they were in elementary school when they were doing that stuff. So he could get out to 1,000 if he really wanted to, but he's got more important things to do. So
Yeah.
happy Pi
Nope,
Day
I
to
was so
any kids.
wrong. It's 3.14159. So I
Oh, I'm no longer
I just
impressed with you.
yeah, I just pulled it out, made it up.
It's okay.
Doesn't matter. I have a
Yeah,
calculator, so I think I'm okay.
there you go. That's it. I'm going to shut up now for real. Sorry.
All right. Thanks, Webby. And thanks, everyone, once again for tuning in. That is it from us for this week. But we will be back with more Monday morning on IBD Live. I mentioned Webby and I, you can catch us starting 10 minutes before the opening bell, running through the first hour and a half plus of trade. We talk about updated market conditions, stocks we're watching, how we are handling our portfolios, and so much more. So make sure you tune in, investors.com/IB Live for all that. And then we'll see you after the close on Monday once again for Stock Market Today. And Webby and I will see you right back here next Friday. Thanks, everyone. Have a great weekend.